All right, let's talk about the S&P 500 SPY ETF, stock symbol SPY for those keeping score at home. We've had an incredible rally off of these April lows. You go back to April 7th, man, I mean, we have just ripped higher, more higher than really anybody was expecting. I mean, it's just an absolute monumental run, 23% or give or take from lows to highs. So where do we stand here? Where are we going? Can we still get to those all-time highs? Can we go beyond the all-time highs? What are the expectations? What should we be aware of? What is the reason for this huge run in equities? We're going to talk all about that in this video starting right now. So looking at SPY, you go all the way back to 2022. We've had this huge rally in equities in SPY and the Qs, but it specifically was SPY. And you had this retest of this rising trend line. We held it perfectly. It went all the way down to as low as 480. What was that? It was about 481, and we bounced. Now, I say perfectly on a closing basis. We never closed below this level. We bounced off of it pretty well. We had an intraday move below it. We opened below it slightly, but overall, we always maintained that closing price. Now, you have this rising trend line that takes place here. And this rising trend line has consistently seen price bounce off of it. You can see where here on 421, we bounced off of it. We bounced off of it again here on May 7th. And right now we're just a little bit detached from it. And over the last 3 days, you could say we've essentially traded sideways, even though over the last 6 days coming into today, we're on a 6-day winning streak, and 17 out of the last 20 days, the market finished higher. But the one thing you'll notice with this market, notice how small the candle bodies are on the down days. There's just not a lot of aggressive selling. You look at the volume here, not much volume today on this selling bar here. And on the 3 previous ones, there was hardly any selling at all. I mean, actually, today's selling had a lot more volume to it than what we've seen in the previous 3 sessions. Still, it's about average volume, not much, and that average has actually fallen over the past month. So not that great a volume. Now, where you start to see selling stick and really show some momentum is when you see the volume bars get much more than just average or below average. When you get these huge volume bars, that's where things start to stick. And every one of these big sell-offs had above average volume here in April. You had a little bit of selling back in mid-March, but if you'll notice, it didn't really go anywhere. You had a little bit of selling there on March 28th. That was slightly above average, but still not that much. The sell-off here from February through early March, that had above average selling. So what do we need from selling? We need to have above average volume, and a lot more than just, like a few ticks above your average reading. It needs to be substantially higher. And we're not getting that right now. We didn't get that today. We didn't get that on the 3 previous sessions. So there's really no reason to get too worked up about this market to the downside until we start to see that volume flow back in. This rising trend line still intact, still the 5-day moving average. We've been closing above it. We've closed above it every day since 5/7. So, we're going on more than 10 days above the 5-day moving average, a little bit over 2 weeks. All very, very strong readings on this market. Is it overbought? Absolutely. It makes me nervous trying to get too long on this market at this point because it is so overextended, and really this whole run up has not provided a lot of good entry places to want to get long because it hasn't really had any consolidation. It hasn't really had any moments where it turned sideways for a bit before it made the next leg higher. You had a little bit of a one right here, but that didn't really materialize into much of anything else. So rising trend line, that's still in place. Now, you also have this resistance level going across. And now, why do I bring that up? We've yet to actually break it during regular trading hours. We gapped above it last Monday, but we retested it and it held, and then it bounced back up. But we haven't actually broken it to the downside or to the upside during regular trading hours. So I still think this one's in play. And where I think it could get even more interesting if we scoot this over a little bit is that if price was to come back down, this would flatten out this trend line of quite a bit. Let's say it comes back down and tests it, over the next, let's say, 3 or 4 days. Then we have a retest of this 576 level and it bounces. Then you have a little bit a better drawn trend line where that takes into effect the lows from 422 and not necessarily the closing price. and it's a little bit cleaner of a trend line, a little bit flatter, a little bit more sustainable. So that's something that could happen. It's going to take some headline events, some shocks to the system to even get it to come off of that 5-day moving average, probably based off of the amount of fervor and enthusiasm among the retail crowd to continue buying the dip. And speaking of buying the dip, what's driving this market higher? It's your retail traders. This isn't really a move from the street. In fact, hedge funds are incredibly short. I think I saw a report earlier today about to the tune of $25 billion that they're getting short on the Qs. They're right near the all-time high. So they're loading up to the short side. And so the retail crowd is doing the exact opposite. What are they doing? They're buying every single dip that they can get their hands on. In fact, they're the main driver of this market right now. So look at the 5-minute chart for me. And what we're going to go back to is the day where we had that massive gap last week on that Monday. So the one thing you'll notice. So here we go. I'm going to start drawing some lines here for you. We gapped way up, and then we formed new lows on the day. It looked like we might even start to fill that gap, like that wasn't going to hold. But what happened? We formed new lows, fresh lows, and then we just took off for the rest of the day. Now, the following day, Tuesday, there was really no dip in the market that day. It just continued to trade higher. But come Wednesday, it was a little bit different because on Wednesday, you did get a little bit of a gap down. And around that 11 o'clock mark, when we had turned around sideways most of the morning, we had a breakdown, sucked in the shorts, and then we rallied right off of those lows again. And then we came back down, made new lows. And what happened? We ran it right back up again. Then you could say the following day, we broke below the lows from the previous day. And what happened? We saw immediate buying. The retail crowd is buying the dip at every turn. And so when these new lows were made, what happened? It took off the rest of the day. You go into the 16th. This was last Friday. You made some new lows right here. And I even said it on my Discord. I said, watch out, making new lows, good chance it just takes off from here. And it did. I didn't necessarily think it would make that big of a move into the close, but it did. Here you have yesterday, following Moody's downgrade, we gapped significantly lower. And really, the lows of the day was only formed 4 cents below where it opened up that morning. And we took off the rest of it. I mean, it never looked back. And this here, around the 12:30 mark, had historic record amount of retail buying at that particular moment. And then again here today, May 20th, you had an initial low here, and you could see where it got bought back up. But then where the real weakness started to show up, look what it did here. Right into the close final hour, we're establishing new lows on the day. It looks like the market was going to fall apart. And immediately you see the volume coming in, and it goes right back up closer to where it started the day out at. So then what you're getting into the close, even when we have a down day, you're not really getting strong or large-bodied candles that are red. They're very small. The opening price is right there near where the opening price was. In fact, you take today, it's almost like a perfect doji candle. The opening price was $593. The closing price was $592.85. So it was like, what, 27-cent difference on a $592 ETF? Very close to exactly where it opened back up at, because the dip buyers kept coming back in to support the market. I say all this because I would love to be able to get short again. I would love for there to be an opportunity to see the market retest those lows from April. Don't know if we're going to get that anytime soon. Market's on a pretty good trajectory to the upside here, has yet to even break below its 5-day moving average. So while I may want something, doesn't necessarily mean that I'm going to get it. And you have to recognize that as a trader. Your wants versus what the market's willing to give you don't always align. So you have to follow the market's direction here. The market continues to move higher. Hopefully I can find, continually keep finding good positions to be able to add to the portfolio to take advantage of that. But for now, the bulls still have a firm grip on the reins of the market. Of course, there's the headline news that could always come about. You could have a change in the tariff scenario that could drive the markets back down again. But until that happens, there needs to be a change in the status quo, and we have yet to see that happen. If you enjoyed this video, I'd encourage you to like and subscribe. Let me know down in the comments below what's your take on SPY right now. I wanted to give you guys a little bit of a different perspective on it rather than the run-of-the-mill technical analysis. Wanted to give you some of my thoughts on what I'm seeing right now. But let me know what you're thinking. I would love to hear what you have to say. Thank you guys, and God bless.